Joining us now in an exclusive interview before the earnings call is William Oplinger, Alcoa CEO, along with Morgan Brennan. Morgan.
All right, Mike, thanks. Bill, it's great to see you. I want to start with results because you had better than expected revenue. You're projecting production increases in both alumina and aluminum for 2026. How would you assess the supply-demand picture?
So, Morgan, thanks again for having me on. It's always great to see you. Before I address the supply demand, it was another great quarter. We're executing at a very high level. We generated close to $550 million of EBITDA, generated over $500 million of cash, and beat consensus estimates across the board. So it capped out a really strong 2025. And in 2025, we had record production at about a half a dozen of our facilities around the world. We're at the top end of our targeted capital structure. So really, really strong 2025. Going into 2026, we're seeing that metal prices are high. Aluminum is in a slight deficit globally. And we're seeing strength in the North American market and to a lesser extent in Europe, which are our two key markets.
Let's talk a little bit about what you are seeing in North America, because obviously you have tariff and trade dynamics at play here. There's been a lot of focus on inventories and where those are located and whether there's been displacements on this decoupling of pricing between the U.S. for aluminum versus other parts of the world. How much of that is trade dynamics and how much of that is the build out we see and we talk about in things like AI infrastructure and industrial demand and the like?
So if I run you through very quickly our end markets in North America, we continue to see strength in North America. Packaging strong, electrical conductors very strong. Building construction is steady. We're not seeing it falling. We're seeing a little bit of weakness in automotive. But to bring it back to the AI story, it's really interesting how much aluminum is used in data centers and AI centers. So for each gigawatt of energy that's used in a data center, there's around 1,500 tons of aluminum that's used in that data center for every gigawatt. So to put that in perspective, every gigawatt is the equivalent of about 100 million beer cans consumed of aluminum. So it's highly aluminum intensive, the build out for AI.
Is there any at all, Bill, swapping for copper? Copper's more expensive. Aluminum is less expensive. Aluminum is lighter, but it also has less conductivity than copper.
Yes. There absolutely is. The aluminum can be swapped out for copper in certain applications. We would say that's probably around 800,000 tons globally, but that's on top of a pretty tight market. So as you see copper prices rise, we've also seen aluminum prices rise because on the margin, you can substitute aluminum for copper.
So much of the aluminum that you are supplying into the U.S. market is made in Canada. How are you navigating trade tensions? And with USMCA talks back on the table this year, how does that change things?
So when the tariffs first came out, metal prices had not responded. Subsequently to that, metal prices in the United States are covering the tariffs. So we continue to ship from Canada into the U.S. The U.S. market is strong. As I ran through the end markets, very, very strong demand. So we continue to ship from Canada. And at this point, the prices are covering the tariffs. And so while our end users are paying higher prices, our company gets covered.
Bill, can you talk us through what you see in terms of inventory? That seems to be a risk highlighted by Wall Street. JP Morgan earlier this month downgraded your stock, citing the looming inventories that are coming online the next couple of years. Indonesia is going to come back online. And then also inventories are looking healthy right now going into the restocking period, which is around Lunar New Year in mid-February or so.
So a couple of points to that question. Ending inventories are the lowest they've been globally at the end of the year for the last 15 years. So aluminum is tight globally. We do see that Indonesia will ramp up production over the course of 2026, but we think that will largely be offset by a couple of disruptions that could potentially go on in the industry. One of our competitors lost a line in Iceland. Another one of our competitors is talking about closing the facility in Mozambique. So those should largely offset the additional capacity that's coming on from Indonesia.
Bill, I got to ask you, I realize the devil's in the details here. We've got a framework deal around Greenland, but you've considered investing there and building out smelting capability there for quite a few years, Alcoa has. What would it take for you to invest there now?
So as you said, Morgan, we've actually looked at investing in Greenland over the last 15 years. And if you go back 10 or 15 years ago, we had designs of building a smelter in Greenland. What it would take to build in Greenland is the exact same thing it will take anywhere else for us in the world to build new primary aluminum capacity, and that's low-cost energy. And I often get asked the question around the United States, will we reshore into the United States? The answer is the exact same. If we can get low-cost, long-term energy, we'll consider building an aluminum smelter. Now, that looks like $30 to $35 a megawatt hour, which against something like a data center would be willing to pay almost 3 times that amount of money. So if we can get low-cost energy in a place like Greenland, we would consider it.
And just quickly, what are the chances of that? I mean, obviously, you've probably tried to assess.
We assessed it a long time ago.
Okay.
It would take time to build out the infrastructure in Greenland, right? The infrastructure that would be needed would be hydro facilities. They're not there now, so we would need to build that out. So it would take time.